All right, so do you guys remember support and resistance? Basically, no one trades that anymore. But let me tell you, there still are some key price points in the market that can act as support and resistance. And this new one I'm going to show you guys is called the midnight opening range. And you want to find the high and the low between 12 to 12:30. So this vertical line delineates the midnight open, and this vertical line delineates 12:30. So we have 12 to 12:30. That's going to be your midnight opening range. Here's the lowest low, and here's the highest high. And you want to extend those price levels out in time. So this pink shaded area is my midnight 12 to 12:30 opening range gap. A lot of times after price moves away from this level, it's going to treat the low and or the high as support and resistance. These are very sensitive price levels. Put a horizontal line on 50% of that range. Once they break out of this opening range, you can see they trade back up and they retest the low before selling off for the London session. What do you see right here at the range low? There is a bearish fair value gap right here at the range low. It's blended perfectly. They rebalanced the bearish fair value gap, blended with a bearish order block, which is this last up close candle prior to the aggressive down move, and then they trade lower for the entire London session. Once the New York session came, they looked to reprice all the way back up above the equal highs right here at the midnight opening range high. And you can see that here. They traded back down, they retested the midnight opening range high, and then traded higher. And what does that blend with? A bullish fair value gap. So for London, whenever they broke out lower, they blended it with a bearish fair value gap and traded lower. For New York, when we broke out higher, they blended it with a bullish fair value gap and continued trading higher. This is the day before. Here is your midnight opening range gap from 12 to 12:30. When price breaks out below that, they come back up and they retest the low of that before selling off for the entire day. Here's another example. We have the midnight opening range highlighted in pink. We have the low and we have the high from 12 to 12:30. After breaking out to the upside, they traded higher. And then for the New York session, they came all the way back down and traded right to the midnight opening range high. You're going to blend the support level with this buy side imbalance. The buy side imbalance is this breakout to the upside, this one large singular up close candle. Right at 9:30 is when the futures market opens. That's when they came rushing down right here. They took out this low and they traded right back down inside of the midnight opening range gap. After hitting that level, they blasted off higher. This is just another tool you guys can add to your toolbox. Let me know in the comments what you guys think about this. Do you guys currently use this, or is this something you just now learned?